today we are going to be covering the VAT part of our module. I hope you guys are ready and are ready to tackle the VAT section. So just as a way of an introduction and for us to see where the gaps are, we're going to just run through some prior knowledge questions. We're not going to go too much into the theory of it. We're going to do more the practical questions so that we can have a better understanding. Tax is something that we need to practice in order for us to do well in. Okay, let us jump into it. So when does a person need to register as a VAT vendor? Any takers, when is a person required to register, or when would they need to register as a VAT vendor?
One of the scenarios, I think, is compulsory registration when your turnover is greater than 1 million rand.
Yes. And the other scenario?
When you anticipate your turnover will be more than 1 million rand in the next 12 months. I think that's it.
Yes. I like what you did there. Yes. Okay, so we have two ways that a person can become a VAT vendor. The one instance is the one that we just heard. That is our voluntary registration, when you are going to exceed 1 million rand, when you can foresee that you're going to exceed the 1 million rand threshold, or you have already exceeded the 1 million rand threshold. Then what is the second situation? It is when a person voluntarily goes to SARS and say, listen, I want to be a VAT vendor, and they have to meet a minimum turnover of 50,000 rand. So if they meet that minimum turnover of 50,000 rand, they can go and register as a VAT vendor. So why would somebody want to voluntarily go and register as a VAT vendor? Sometimes you might find yourself in a situation where you have quite a number of expenses when you're starting out, and you would like to receive your input tax back. And you can see that it would be beneficial for you to go and register as a VAT vendor. So you go to SARS and you register as a VAT vendor.
No. I just had a question. You said voluntarily when someone's entity is exceeding 50,000 in a month or in a year?
In a 12-month period. So that is why a person would voluntarily go and register. And sometimes if you are in the business of having tenders, sometimes the municipalities or the government entities that you are working with might request you to go and register as a VAT vendor so that they can go and claim the input tax back, because that's how they operate. They only registered for VAT and they're not registered for income tax. So for them, it would be beneficial to operate with VAT vendors. Yeah, so that's just a summary of when you would need to register as a VAT vendor. Then let's look at the next question. How is it that the VAT system works? How do you guys understand the VAT system to work?
I would say it's levied on all supply for of a vendor that's registered in SA at a standard rate of 15%, on taxable supply, 0% on exempt supply, and 0 rated.
Okay.
As well. Yeah.
Tell me something. Is an exempt supply a taxable supply?
No, it's not taxable.
So yes, it's an exempt supply. So it's very important for us to distinguish between the two. An exempt supply and a zero-rated supply is not the same. A zero-rated supply is a taxable supply. So that means we can claim input tax with regards to our zero-rated supplies, whereas our exempt supplies, we cannot claim input tax on. So it's very important for us to distinguish between the two things. A lot of people make that mistake with regards to the zero-rated and the exempt. They categorize them together because they say there's no tax on them, so we put them together. But in actual fact, zero-rated supplies and your standard-rated supplies are actually together because they form part of your taxable supplies. Okay. Anything else somebody else wants to add?
I just like to add on what a gentleman said, and I think it also works the way that you get direct tax and indirect tax. The direct tax is where they, for example, will tax you via, oh, I'm not sure now. I think I'm now following, don't trust what I'm saying at the moment. But yeah, the one is when you get just, for example, your salary from work, and that's how you get tax. And then the other one is indirect tax, for example, when you go to a shop and that's where it's added on top of the goods, which means then now the, how can I say, the shop is now going to pay that tax, the output tax. Yeah.
Correct. Okay. Yes, you're right. So the direct tax is when you work at your employer, and your employer withholds your pay as you earn, and they pay it over to SARS. That's a direct tax. They're taxing you as an individual based on the income that you are making. Whereas an indirect tax, they are taxing you on your consumption. So it doesn't matter who you are, how much money you make, you will still be taxed the same amount as everybody else. That's an indirect tax. So you've explained it lovely there, that your indirect tax is when you go to the shop and the shopkeeper will then pay it over to SARS. Okay. Oh, so VAT is an indirect tax. Yes, 100%. Okay. Okay, the hands run away now. Okay, awesome. So the VAT is taxed separately from your income tax, but it does have an impact on your income tax declaration. So we always need to make sure that when we are calculating our income tax turnover, we exclude the VAT portion of the income that we have received, or even the expenses that we're incurring. We need to always make sure that we exclude the VAT portion. And then VAT is then based on the rules of the VAT Act, whereas income tax is based on the Income Tax Act. And then the rules are applicable at every stage, or VAT is levied at every stage of production. And then also we know that our VAT rate has changed from 14% to 15% on the 1st of April 2018. And at the moment, we are praying it stays at the 15% and it doesn't increase to the 15.5 or the 16% that Treasury and the Minister of Finance are still working on. So hopefully it just stays at the 15% for the next foreseeable future. Okay, so that's just the gist of it. And then when and at what rate is VAT levied? We've already covered it. It's at 15% or at 0%, depending on the type of product or service that is being supplied. And then it is levied when a VAT vendor sells a good to anyone. Only when you're a registered VAT vendor, that is when you levy VAT. If you levy VAT and you are not a VAT vendor, best believe you're breaking the law. And if SARS finds out, they're gonna come and want their 15%, because that's how SARS works. If you say to people, I'm charging you VAT, and SARS finds out, they will come and fetch their money. So if you're not a VAT vendor, do not charge VAT, because you're not supposed to be charging VAT. Okay. So how long is a VAT period? Any takers?
So it's actually, you have 2 periods. You have every 2 months or monthly, depending on your turnover.
Perfect. So it depends on your, okay, Dumelo?
Oh no, just like that there's a third category, which is biannually. I think it's every 6 months.
Yes, correct. So we now have the 2 monthly periods, which would be your either it will be your even months, which would be February, April, June, etc. Or you would have your odd 2 months, which would be March, May, July, and so forth. And then you have your monthly period as well. You also have your 6 months period, and also in instances where, in some instances, there is a 12-month period, so you do it only once a year. So that is where we want to reduce the administrative burden for that specific VAT vendor so that they don't keep coming back every month or every 2 months. They just do it at the end of the year. So it will all depend on the category that you are placed in as a VAT vendor by the Commissioner of SARS. And the Commissioner of SARS is anyone who works at SARS who's been given the power to communicate to the taxpayer what category they fall under. Okay. So this is very important because you need to always make sure that you have the correct number of months so that you can calculate the VAT payable or the VAT refundable to a specific taxpayer. Okay. So what are the requirements for the documents that are the driving force for the VAT system? So if you are a VAT vendor and you need to go and claim input tax, what documents do you need to go and claim the input?
So you need the supplier's invoice. It has to state it's a tax invoice with your details. It's a company name, full address, and the invoice number. It has to state tax invoice, your VAT numbers for both the supplier and your VAT number.
Correct.
Yes.
Yes, sorry for interrupting. Yes, you are correct. So that is important for instances where the taxpayer is claiming for, or the consideration amount on the invoice is more, or the supply rather, is more than 5,000 Rand on that tax invoice. So you need to make sure that all of the requirements in terms of Section 24 of the VAT Act are met. So you need to have the words tax invoice, VAT invoice, or invoice on the invoice. You need to have the name and the address, VAT registration number of both the supplier and the recipient or the buyer. Then you also need to have your serial number on it, the date, the full and proper description of the goods or the services that were supplied, the quantity or the volume of the goods or services supplied, and then either you're going to have the value of the supply and the amount of the VAT charged, and then the consideration at the end, or you're going to have where the VAT is charged, where the VAT charge is calculated by applying the tax fraction to the consideration. You can have the consideration of the supply and either the VAT charged or a statement that it includes the VAT and at what rate the VAT was charged. So that is when you have a full tax invoice where the supplies exceed 5,000 Rand. Where in instances where the consideration for the supply does not exceed the 5,000, then you can have an abridged tax invoice. And this then can just have the words tax invoice, VAT invoice, or invoice, the name, address, the VAT registration of the supplier. So you don't need the buyer's information in that regard. Then you still need to have the serial number and the date, the description of the goods, and then the value of the supply, the VAT levied, and the consideration. Or in the instance where it's a tax fraction, you need to have the consideration and the statement that the VAT was inclusive and at what percentage. So in the instance where it's less than the 5,000, the only difference is that you don't need to have the buyer's details. Yeah. And what else? And yeah, that's it. So that's the gist of it. In other instances, you could have a credit note, a debit note as well, where there isn't invoices. Sometimes you find that there are companies where you only receive a statement every month, like your cell phone bills. You don't get an invoice from them every month. So at times you would get a statement instead, and you'll see they will have statement/tax invoice so that the person who's buying from them can still use that as their document to claim VAT. Okay, then our next question is, so when is a supply a standard rated, a zero rated, or an exempt supply? Give me an example of a standard rated supply.
I don't know about when, but I know what
Okay.
is the standard rate. Yeah, standard rated, so it would be charged at the 15%. And then an example would be me buying a TV. That would be at 15%. And then zero rated is when the tax is charged at 0%. Not sure about an example, but exempt would be your milk, bread, and stuff. So there you don't charge tax at all.
Okay. We're going to come back to you. We're going to come back, Precious.
I see with exempt, I think, I hope I have it right. It's your imported goods, and then with your the zero rated, as you said, it is you first look at a good whether it is exempt or whether it is exempt first and then zero rated. Then if it's not either zero rated or exempt, it is then standard rated. And then with your standard rated, it is any like your electronics and stuff that you sell within the company. I mean within the country. And then we have the exempt supplies, which is your transportation, certain transportation. Sorry, I forgot which ones. And then we have the zero rated, which is your bread, your milk and stuff.
Perfect. Thank you. Thank you for that. Let's talk about the when. When there is, in terms of section 71A, this is the section that tells us go forth and charge VAT. That is the section, right? So that section tells us that where there is a good or a service in the furtherance of your enterprise, this is when you will levy VAT. And then it also tells you that you will then do it at the rate that the commissioner says at that time. So in that instance, now you need to understand what is a supply. A supply is defined as anything that includes, it could be anything. It also includes your transactions under any sale, rental agreement, or installment agreement. That is a supply. And then your goods, it can be anything as well. It can be a corporeal, movable thing, a fixed property, any real right, or even electricity. Then it tells us that you can also have a service, and it's defined as any service. And then it tells us that not all services are defined are taxable supplies. So there's also an exclusion in our definition. It tells us that under the goods, the definition of goods or services, money is not viewed as a good or a service. So that means there will be no implication in respect of money. Okay. So that is when we will go and levy VAT according to section 71A. So you need to have those three elements. You need to have a supply, you need to have goods or services, and you also need to have it in the furtherance of your enterprise. So if it does not meet those three elements, you don't have an opportunity, you cannot go and levy VAT. That's what we see in terms of section 7.1. Then the types of supplies, it will be your taxable supplies and your zero-rated supplies. Taxable supplies being at your standard rate of 15%. Then your zero-rated supplies, the examples were given, is your food stuff, your basic food stuff, your milk, your bread, your milk, yeah. And then also your fuel. Then also your travel by air, which has any leg of the ticket that is outside of South Africa.
Oh, yes. I just had a question. I just need some clarification. So,
Yes.
the when, all that you just explained right now is basically the requirements that need to be met to levy the output tax.
To levy VAT.
Yeah.
Remember,
those-
output tax is the VAT that you have on your when you sell, when you are the seller. That's what we call the output tax. Yes. Yeah.
Yes. Okay. All right. Thank you.
All right. Awesome. Okay. Zero rated supplies, which is okay. So your zero rated supplies examples are your fuel levy goods, your sale of a going concern, your basic foodstuff, your travel by air, where any leg of the ticket is outside of South Africa. So what we are saying there is, if I am going to travel from here to Thailand, that will be a zero rated supply. But if I'm flying from here to Durban, standard rated supply, 15%. But if I am going to travel from Johannesburg to Durban to Bali, then that whole transaction will be a zero rated supply. Okay. Then going back to our going concern, there are terms and conditions that apply with us selling our business as a going concern. And these requirements are all found in Section 11E of the VAT Act, where it tells us that the parties of that agreement need to agree in writing that they're going to be selling it as a going concern. Ne? Then the person has to also agree that they're going to continue to be making an income. They're going to have an income earning activity. So I cannot then buy a business from ABC Production that is currently running as an enterprise. And then I take it over and I say, no, I'm not going to do what they were doing anymore. I'm going to change exempt supplies. Then that means it's no longer that going concern anymore. Okay. Then another condition is that all the assets that the other enterprise is using has to be sold as a going concern. If the assets are sold separately, then it's no longer treated as a zero rated supply. Then you will then go to your normal standard rated rules accordingly. Then the parties must also agree and say in writing that the sale will be at a VAT rate of 0%. Another condition is that both parties must be registered as vendors. If not, the purchaser can register, voluntarily go and register as a VAT vendor so that they can then take over that business. And then they would meet the requirements of the Section 11E. Then that transaction will be then zero rated. Okay. Okay. Then our examples of the exempt supplies are your financial services, and these are defined in Section 2 of the VAT Act. Not all services that are provided by your financial institutes are exempt from VAT. So, for instance, your bank charges, they have a standard rated supply on it. That is a standard rated supply. If you go and you look at your bank statement, you'll see at the bottom that there is a VAT percentage that is levied on the bank charges. But things like interest, so your bank charges, standard rated supplies, but your finance charges, things like your interest, that will not be that will be an exempt supply. Yeah, those are the examples that I have in my brain when it comes to your financial services. Then residential accommodation, that is exempt. However, if you are providing commercial accommodation, that is not exempt. That is, for example, if I am running Dineo's B&B, then I have to levy VAT on the services that I provide in my B&B. that is no longer a residential accommodation. But then if there are times when people come and they stay at Dineo's B&B and they stay for a period longer than 28 days, then I can then adjust my output tax levied on 60% of the inclusive charge levied. So then I can go back to day one and apportion it between the 60%. I can levy only on the 60% and not on the other portion. So then they're saying to us, okay, no, it's okay. Because the people are staying with you for a bit longer, we will then view it as if it is partly residential accommodation. Okay. And then donated goods and services are exempt. Passenger transport by road or railway within the Republic, that will be exempt. If now I am sending my bag ahead of me, for instance, I say, okay, I'm gonna courier it with ABC Couriers. That service that they are providing to me is a standard rated supply. I will pay VAT on it. But if I go with my bag to Cape Town, that will be an exempt supply. So if I am moving with my bag, exempt supply. If I am sending my bag ahead of me, standard rated supply. Okay. Then our school, university, technical, or colleges, that is also an exempt supply. I don't want us to spend too much time on the theory. All this information is in the slides, and the slides will be provided to you. I want us to go back to the examples that are available to us that we can go through. This is taken from your practical examples. So we are going to run through 2 examples if time permits. If not, we will go through the 1 example at least. Looking at the time, yes, we should be able to go through the 1 example. Okay, so here we have an example. We are required to calculate the VAT payable or refundable to Many Rent Pty Limited for the tax period ending 31 January 2024. Just looking at that first statement, what can we already tell? Shwe?
I was just wondering if you were not supposed to be sharing, or is it me who cannot see, because I'm only seeing the names of the participants here. I'm seeing it. I'm seeing a bit of what you are sharing.
Am I not sharing?
Is it a problem? I'm seeing a little bit of it on the side.
Is it?
I'm not sure if it's me or everybody. It's happening to everyone, or I can see everything. On my side, I'm seeing the names on my screen. Okay.
Is it not maybe the way you seated?
I don't know. Probably. That is why I'm saying I'm seeing what you are sharing, but it comes very small. And then the bigger screen is whereby there are names. This has never happened before, but
I think you might
kindly maybe disconnect and log on again, because the other people I can see, and everyone on the chat, they say they can see everything. Sure.
How about clicking on the slides itself instead?
Let me try that and see. Oh, wonderful. Yes, there it worked. Thank you so much. I was wondering what was happening. Thanks a lot.
Okay.
Thank you.
Thank you, everybody. Okay, so let's see. Just looking at the information that we've read, the first sentence, calculate the VAT payable or refundable to Many Rent Pty Limited for the tax period ending 31 January 2024. What period do they use? What tax category do they use?
I think it's category B.
Okay, so they are on the odd periods, right? So they will have the 2 months being December and January. So keep that in mind when we are going through the information. So this question is worth 31 marks. They tell us to show all our calculations and clearly indicate, supported with reason, for not claiming input tax or for not levying output tax on specific items. Okay, so that is important. That means you need to show them why is it that you're saying a dash or zero. And you also need to explain the reason why. Okay, let's go and look at our details. They tell us that Many Rent Pty Limited earns its income from both commercial rentals, that is your office blocks and factories, and residential rentals. What do we know about commercial rental and residential rentals? What types of supplies are the two?
Commercial is a standard rated supply, and residential is an exempt supply.
Thank you, 100%. So we need to keep that in mind. We cannot claim input tax on which one?
On the residential.
Thank you so much. Okay, so Many Rent Pty Limited is registered for VAT purposes on the invoice basis. So that tells us that they need to then declare their income on the earlier of receipt or on the date that they issued the invoice. So it's the earlier of the two, receipt of payment or the day that they issued the invoice. That's what the invoice basis tells us. So as Many Rent Pty Limited makes both taxable and exempt supplies for VAT purposes, the Commissioner applied an acceptable input tax ratio of 60%. So this is important. We need to keep this ratio in mind when we are apportioning our input tax that we can claim. So we can never claim input tax at 100% on goods that are used for both the commercial rentals and the residential rentals. So where they specifically tell us that the good or the service that they are paying for is applicable to the exempt supplies, we will then not claim any input on it. But if they tell us, if they are quiet or they don't say anything, our assumption is that it applies to both the commercial and the residential rentals. Okay, then they tell us that the accounting system operated by Many Rent Pty Limited has provided for the following analysis of its income and expenditure for the tax period ending 31 January 2024. All amounts are inclusive of VAT where applicable, unless specifically indicated otherwise. Why is this statement important?
I think it's important so that when you are calculating that, you know whether to apply 15/100 or 15/115.
Correct. So when do you apply the 15/100 and when do you apply the 15/115?
15/100 is applied when it is exclusive of that, and 15/115 is that.
Say it again. I missed something. Just say it again.
15/100 is when it's exclusive of that, and
yes.
15/115 is
correct. So in this instance, we will use the 15/115 unless they tell us otherwise. Okay, thank you. So let's look at the information that we have. They tell us that we have commercial rentals. That's where we're starting our question. Excel, there's the Excel. Transaction. Transaction. Calculation and reasoning. Reason, and then that's the R column. Okay. So the first transaction that we have, they tell us that we're going to use this part for the output tax. The first is the commercial rentals. Okay. What do we do with the commercial rentals? So they tell us they have commercial rentals of 279,300 Rand. What do we do with that?
We levy output VAT at that tax fraction of 15/115, since it's VAT inclusive on the full amount.
Correct. Yes. So here we're going to take the 2,700 multiplied by 15/115, and that would give us an amount of times 15/115. That would give us an amount of 30, just to get the commas there. Yeah, 36,430. Let us remove the cent so that it doesn't confuse us. So that's the first transaction, and that is worth 1 mark. I'm just going to put the marks as we go as well so that you can see how the marks are allocated. Okay. Then they tell us our second transaction. Residential rentals were, they made income of 182,400 Rand. How would we treat the residential income?
Because the residential income is an exempt supply, so that would not be subject to VAT.
Correct. So what do we put there? Do we put a 0 or do we put a?
We put a
dash?
0.
Why
dash,
zero?
a 0.
Okay.
Because there's nothing there. It's not going to be included in the calculation of the VAT payable or VAT refundable.
Okay, so let's move on to the next transaction. They tell us there was interest levied on overdue rentals. How do we treat that one?
With regards to this, I would say that is an exempt supply, so we wouldn't levy VAT. But I wanted to see which section that would be under. Would that be a financial service, or would it be because it's linked to the rental?
Remember, in this case, they don't tell us, is it related to our commercial or our residential? It could be on either one of them.
Okay.
Yeah. So it's not based on the service or the supply that they are giving in this instance, but it's actually because of the fact that it's a financial service. Financial service.
All right.
That is why it is exempt. Okay. And that is a dash, and that is for 1 mark. Okay. So there we already have our easy 3 marks out of 30. Out of 30, what was it? 31. Okay, awesome. Then they tell us we have an insurance settlement, and they tell us to go and refer to note number 1 for further details. Okay, and the insurance settlement was for 180,400 Rand. Let's go see what they tell us. Note number 1. The insurance settlement of 180,400 Rand was for a truck that was stolen in November of 2023. The book value of this truck at the time it was stolen was 160,200 Rand. In January of 2024, on receipt of the insurance settlement, Minirent purchased a new truck. Okay, we'll come back to that. So they received the insurance settlement only in January of 2024. So even though the truck was stolen in November, but the insurance money came only in January of 2024. How do we treat this amount of money? The insurance award. Yes, Mpumelelo.
I think, I can't remember it exactly, but I know this is something to do with indemnity payment.
Yes.
And there's a consideration about whether the indemnity payment was replacing the asset or if it was not replaced. So in this case, the asset was replaced. So something happens there. Just forgot what's the trick.
Okay, I see what you did there. Yes, Tumelo.
Going off of what he just said, I believe the truck has to be used in the enterprise to create taxable supplies, essentially.
Okay.
But
so in this instance,
Sorry, yes.
In this instance, they didn't say anything. So the assumption is it was used for both the taxable and exempt supplies. Yes, and Neil.
So I think it's because it was a cash settlement, it would attract output VAT, and it wasn't a replacement.
Correct. You are 100% correct. So in this instance, this statement here, yes, Tumelo?
Right, then this would be a deemed supply, I'm assuming.
Yes, it would be a deemed supply. So in this instance, this statement that they made here about them going to purchase a new truck is just so that you can think, oh yeah, if they are replacing the asset, then I don't have an indemnity payment, so there would be no output implications. It's just there to make you think in that direction. But in actual fact, they received the money, the 180,400 Rand, and thus they need to declare the output tax on it. And we need to apportion it between our exempt supplies and our taxable supplies accordingly. Okay. So let us go there. And we will say insurance reward award. And that is for 180,400 multiplied by 15 over 115. Remember, it's always at the tax fraction, the 15 over 1.5, multiplied by the 60%, which is for our taxable supplies. And then let's just get our value. I hope that works. Yes, that is correct. Fix it. Okay, and that is with 1 mark. That is our deemed supply. Okay, then we go back to our information. Then they tell us, okay, that is everything that we have with regards to the income, right? So now let's go look at the expenses. So for now, we will just, okay, let's look at the expenses first. They tell us that we purchase a new commercial building to be let. And that is note number 2. Let's see what they tell us. They tell us many rent purchased commercial building on 14 December 2023 for 1,240,000 Rand. Many Rent decided to let out the building from the 1st of January 2024, and a lease agreement was concluded with Office ABC Pty Limited. And this is a registered VAT vendor. The leasing agreement determines that the lease period is for a 20-year period as of the 1st of January 2024. Excuse me. According to the contract of Office ABC Pty Limited, must affect improvements to the existing building and to extend the office space at a cost of 550,000 Rand. The improvements were complete on the 31st of January 2024. Office ABC Limited will use the building to make 70% taxable supplies. Please note the lease income from this building is already included in under the income. So you don't need to worry about the rental income from this. So you can just ignore that portion. So now, what do we do with the purchase of the building?
Okay, my answer again is not all the way there, but just to maybe contribute to this conversation. I see the 70% taxable supply, and I know that when the taxable supplies are less than 95%, then we must apportion it according to how much of it is taxable. So the figure that we're looking at is, how much was that figure? The improvement is what's the question? Which figure are we looking at?
Okay, we're starting off with the 1,240,000.
Oh, so we're not even there yet. Okay. Okay, so
we'll get there. Let's start here by just the purchase.
Okay, so here I would just say this multiplied by the tax fraction, because the commercial supply is a taxable supply.
Yes, correct.
Yeah. So 1240 times 15 over 115.
Okay. So we will have that, and this is our input. That's our first. I'm going to leave a few lines open because we're going to still come back to some transactions there. Commercial building purchase, commercial building purchased. Say, so we will use the full 1240 0 multiplied by 15 over 115. And we will not apportion this because we're using it 100% to make taxable supplies. So it's not necessary for us to apportion between the 60% and the 40%. If this building was being used 60% for commercial and 40% for the exempt, then we would have had to do the apportionment. But in this instance, we did not have to do that. Okay. Yeah. Times 15. Yeah. So we can just put a minus here so that we can see that these are our inputs and they're going to reduce our output tax up there. Yeah. So then they tell us another story in the same note. And the story is, someone's mic is unmuted. Okay. Then they tell us about leasehold improvements. Who can tell me something special about leasehold improvements? What do we know about them?
Okay, I can try.
Yes, you
so
can.
if the leasehold improvements were made out of a necessity to the building or stated in the lease agreement, then we can claim the VAT. If it's not, or if it was just done for because it looks nice or to raise the rent, then we can't claim VAT on it, I think.
Thank you, Charlize. So there is a section in the VAT Act, and that is section 18 cap C. And this says, in this section tells us about how we need to treat the leasehold improvements. And this is from the 1st of April, 2018. So they tell us where the leasehold improvements are not utilized by the lessor solely for making taxable supplies, as in this case, then the lessee will only be using, because they tell us here that the lessee will only be using it to make 70% taxable supplies, then the lessor needs to account for the additional output VAT levied. Or yeah, the VAT liability. So in this case, we will then need to declare the output tax for the 30% that is not being used to make taxable supplies. Because on the other side, that person is going to go and claim the input tax because they are required by the contract to effect those improvements. But in actual fact, they're only using it 70% to make taxable supplies. So somebody is losing out because they can claim the full 100%, as Charlize explained. Because it is a requirement of the contract. The contract says you need to go and effect your improvements of 550,000 Rand, and that lessee, the person who's renting it, will then be able to claim the full input tax on that amount. But now, because SARS is giving that person a benefit, even though they're not actually using the full 100% for taxable supplies, the 30% needs to be then declared by the lessor, which is the renter, the landlord. Yeah, the landlord, many rent. So we will then take this 550,000 Rand, and we will then account for the improvement adjustment as part of our output tax in terms of Section 18 Cap C. Okay. Let us go there. Improvements. Ooh. Improvements to the commercial property. And we will then take the 550,000 Rand, multiply that by 15/115, multiply that by only the portion that is not used for taxable supplies, and that's the 30%. And that will give us an amount of times 15/115 multiplied by our 30%. 30%. You know what, let's just do it that way. It's going to be easier. Okay, and this is worth 3 marks. So that is a big chunk of marks to lose out on. So we always want to make sure then we put in as much information as possible. So this is actually called our leasehold improvement on our commercial property. So we can call it that, leasehold improvements. Yeah, hold improvements. Okay. Is everybody comfortable with that transaction? Yo, Baba. I'm sorry, I cannot say your name. Please forgive me.
Hi, Dina. No problem.
Hi.
I just want, can you please go through the insurance? I missed it, and I'm not sure if I missed something. Do it again, the insurance settlement.
Oh, the insurance.
Yes.
Okay. So with the insurance, because they received the cash amount of 180,400 Rand for the truck that was stolen, they can then, they must then treat that as if it's a supply to their insurer for the truck that was stolen from them, because they received money. Had it been that the insurance company had given them another truck, then there wouldn't have been any output tax. But because they give them money, they have to take the 180,400, multiply that by the tax fraction, 15/115, and then multiply it only for the portion that they're using it for, making taxable supplies. In this instance, they told us that it's the 60%, and that's why we use 60% and not 40%, and not 100% as well. Okay. Does it make sense?
Yes, it does. Thank you. I was confused where is the percentage coming from, but okay, now it makes sense.
Okay, perfect. Awesome. Thandokazi, then Mpho, and then Jabulu.
Can I ask, why did we use 30% instead of 70% to calculate the amount?
Okay, so remember on the other side, the lessee or the person who's renting the property, because this is a leasehold improvement according to the contract. The contract says you must go and go and improve my property. And this is the amount of money that you must use, the 550,000 Rand. That person can go and claim the input tax in full there on that side. Ne? Now, SARS is saying, wait a minute, we are giving that person the benefit. Someone has to pay us for the portion that is not being used for taxable supplies. So the person who's getting the improvement must then come and give us our money. That's why we're using the 30% that they are not using for making taxable supplies. Had it been that they were making 100% taxable supplies, and then we wouldn't have to declare the output tax. But because they are making only 70% taxable supplies, that is why we are declaring the output tax on the 30% taxable supplies.
I want to ask why we apply 60% on insurance. I didn't understand that part.
Okay. So here, the truck was used to make both your taxable supplies and your exempt supplies. So because you were using it to make 60% taxable supplies, you would then have to declare the output tax only at the 60%. The 40%, you wouldn't have gotten the benefits for the insurance that you would have been paying every month. So you only got the benefit on the 60%. So it wouldn't be fair for you now to pay also on the 40% because the 40% you never actually benefited from.
Okay.
So when you bought the
Thank
truck,
you.
oh, okay. All right, awesome.
Back on the rent, the commercial building transaction. I'm trying to ascertain if I got this correctly. So according to the lease improvement, the 550,000, ABC Office ABC Pty Ltd will what submit a claim for VAT for the 70%. Hence, us submitting output tax for the remaining 30.
No, remember they're going to claim the full amount because they are forced to go and submit. They are forced to go and make the leasehold improvements according to the contract.
So yes, so that's a VAT transaction, right? The full 550.
No, the 15%, the 15 over 115 of the
yes, I understand that.
550. Yes,
the VAT amount. Yes.
Yeah. So
okay.
As the government, they're saying we gave somebody the benefit, somebody has to pay us back.
Yes,
so we charge the person who is going to live with those improvements.
Hence us carrying the 30% burden.
Yes.
Okay, thank you so much.
All right, awesome. Yes, Esther, I saw your hand a few times. Go ahead.
I had a question regarding the leasehold improvement, but I think you've answered it already.
Okay, awesome. I'm glad I answered it. Okay.
Sarah, ma'am?
Yes.
Yes, ma'am. On the leasehold, ma'am, does this only applies to when it's stipulated on the contract or whenever there is improvement on the property?
No.
Okay.
Yeah. Remember when I asked the question, what happens with your leasehold improvements? Charlene explained it beautifully. If it is obliged on the person that they must go and make the improvements, and if it's a necessity for them to make that improvement, then they can claim the full amount. But if it's just for the niceness, then they cannot claim the full amount. So it will depend on what the contract says. Okay, I'm assuming the answer is they got the answer that they wanted. Okay, awesome. Oh, okay.
Sorry to keep you on this one. Just the test on the leasehold improvement is what? It's if it's stipulated in the contract that you have to, then what?
Then you can claim. Then they can claim the full amount of the inputs.
This consideration spent.
Yes.
Okay, and then if it's something that you were just doing, or the lessee lessee was doing, then not.
Yeah.
Okay, thank you.
Awesome. Okay, let's move on so that we can get to the next question. Yes, Ledrama. Yes.
Oh no, it's fine.
No, we don't want you to be lost. We want you to be found.
So now I'm a bit more confused because in this example, it was stipulated in the contract that his office ABC is the one asset. He's the one that taking over the improvements. I want to know, they will claim the full 100% of the 15%.
Okay, let's move on to the next transaction then.
I'm still a bit lost. I'm sorry, guys. Could you just repeat for the last time? I'm lost with everything with that, how all that concept works.
Okay, which concept? We were jumping back and forth between 1 and 2. Which one are we going back to?
I think both of them.
Leasehold.
If you could just touch on them again.
Okay. Okay, let's go back to the track. No, it's okay. Let's go back to the track that was stolen. So when the truck was bought, the person would have claimed the input tax only on the 60%. Ne? And then they would have also been able to claim the insurance at 60%. Now the truck is stolen, and then the company gets an insurance payment of 180,400 Rand. They get money in the bank. So now you are now seen as giving your insurance company a good, né? And that's the stolen truck. And that's why they're giving you the 180,000 Rand. So now you need to go and declare the output tax on that 180,400 Rand. So you will multiply it, because they told us all the amounts are inclusive of that. You will multiply the 180,400 by 15 over 115, and then you'll multiply it again by the 60%, because you were afforded the benefit only on the 60%. The other 40% you were not able to claim the input tax on either the purchase of the truck or even the insurance of that truck. Okay. Now, when we look at our leasehold improvement, we need to look at whether it is a voluntary or a compulsory improvement. So we need to look at whether there is a stipulation in the contract, or if the building is in such a condition that you cannot use it. Then you'll be able, as the person who is leasing that property, you will then be able to go and claim the input on that. Ne? If now you, as that leasee, are using a portion of it to make non-taxable supplies, meaning SARS is losing out on that portion, you were able to claim the input tax, but now you can. Then SARS now says someone needs to pay us the portion that we're losing out on. So the 30% needs to be taxed in the hands of the person who receives the improvements, and that is the lessor, the landlord. So now we are going to calculate the output tax on the 550,000, multiplied by 15 over 115, multiplied by the portion that they're not using to make taxable supplies. In this instance, it was 30%. Okay.
Yes.
Are you happy with that one?
Yes, I'm very happy.
All right.
Now, having explained both scenarios, that is the insurance as well as the 550, that is the leasehold, are these I am 100% sure that the insurance one is the liability, but I'm not sure of the 550, that is 30%. Is it a VAT declared or a VAT liability? I'm a bit confused about
it. It's output tax. In this instance, it's output tax. Yes.
Oh, okay.
Yeah.
Okay. Thanks.
Awesome. All right, then. Okay. Then they tell us that we purchase new residential flats to be let out. How do we treat that? The 840,000 Rand.
I think we exempt this. I think we exempt this.
Okay. So there would be no input tax allowed on it. Okay, because it's not a taxable supply. Okay, awesome. Then let's move on to the next transaction. And then they tell us that we have bank charges. How would we treat the bank charges? Now it's a test of who was listening to me in the beginning. How would we treat the bank charges?
Standard supply.
Yay! 100% whoever said that. So we're going to take the bank charges of 1,254. Bank charges of 1,254 and multiplied by 15 over 115. And it will give us 164 Rand. Small money that we can claim back from SARS. Okay, let's just make it minus there. Okay, then our next transaction, they tell us that we have audit fees. Oh, sorry. What did I leave out in the bank charges? What did I do wrong? Yes, Esther.
You did not multiply by the, what is it, 60%? Was it 70% from the question?
Yes, the 60%. Thank you.
Yes.
And it's easy to make that kind of a mistake. You're rushing to beat the time, and then you forget to apportion. Then you lose out on your mark. There we go. Okay. Then they tell us we have auditing fees. How would we treat that? The auditing fees. And I'm under 14,250. How do we treat that?
Standard supply.
Standard supply.
Yes, so it's 14. 8 times 15 times 60%. Yeah. And that is one more. Small money, but it makes a difference at the end. Okay. Then they tell us the next thing is the salaries and wages of 66,120. How would you treat that?
I think it's a VAT exempt.
Why?
It is not a supply.
It's not an enterprise. Mini rent is not an
100%. The last person who just said it's not an enterprise, that is correct. Employees do not carry on an enterprise, so we cannot charge VAT or claim VAT on that. So it is not an exempt supply. Please do not say that. That is incorrect. It's not an exempt supply. They do not carry on. Here we go. Employees do not carry on an enterprise. Okay. Dash there as well. Ugh, a dash. Not a minus. There we go. And that is for a mark as well. Okay. Then they tell us that we have a track of 102,600. Let's go to the track in note 3. Yeah, it's in note 3. They tell us that the depreciation is calculated on the 2 vehicles owned by Mini Rent Pty Limited as follows. Firstly, a motor car used by its managing director purchased in March of 2022 for 97,750 Rand. The managing director had the sole use of this motor vehicle for the entire tax period, excuse me. Secondly, a truck was purchased in January of 2024 at the cost of 102,600 Rand, including VAT. To replace the truck that was stolen in note 1, this truck is used to transport the maintenance team between the various buildings. Okay. Anyone can go. There was 3 hands just now. T. So let's just focus on the truck first that was purchased, and then we can deal with the others. Yes, Precious. I think the truck is input tax at 15% with and then the 60% thingy. Okay. So how do we do the 15? Is it 15 over 115 or 15%? It's 15 over 115. Ah, okay, great. Awesome. And 60. Yes. And then do I continue or do I? Yes, go ahead. Go ahead. Go ahead. And then the first one, I fringe. So how do you treat the fringe? The fringe, because it's a motor car, motor vehicle, same thing, Moss. So then it's a deemed supply. And then we do it at 30% and it's output. Fringe benefit. There's a story you just said here. We're gonna talk about it just now. Director's vehicle, director's motor vehicle. Okay, motor vehicle. So now let's calculate it. So they told us that the value of the vehicle is 97,750. Dozama.
Hi, Dini. Where does this 60% come from?
The 60%. Okay, let me show you. In the beginning of our question, they told us that the taxpayer was allowed by the Commissioner of SARS to apply an input tax ratio of 60%. So that is where the 60% comes from, because we are apportioning between the commercial rentals and the residential rentals.
Okay. One building uses for multi-purposes. Okay. Okay.
The communication is not clear if it's one building for multiple purposes, but their business is made up of both commercial rentals and residential rentals.
Okay, thank you.
Okay, awesome. Back to the note 3. Okay, back here. So we go back to our managing director. We were on the Excel spreadsheet. And we were talking about our calculation of the fringe benefit. Oh, why did I say the 100 day? 15 over? No. So now we first need to determine what the value of the vehicle is without the VAT, right? So we would take the 100 over 100 over 115 so that we can get the value excluding the VAT. And this is how it's written in the provisions of the 7th schedule. So we are using part of the income tax in order to calculate the fringe benefit, because that's what the VAT Act tells us to do. It tells us to go back and look at what the Income Tax Act rules are with regards to the fringe benefit. So the fringe benefit calculation of the right of use of a motor vehicle says that you need to, in order to calculate the fringe benefit, you need to first determine what the value is, excluding the VAT amount on there. So that is why we first take the 97,750 multiplied by 100. Okay. Then from there, we need to see what is the value that we need to apply to it, either the 0.3% or the 0.6%. So this will be dependent on whether or not the taxpayer was able to claim input tax when they purchased the vehicle. So in this instance, because it was a motor vehicle as defined, then they wouldn't have been able to claim the input tax. So we will use the 0.3%. Okay, times 0.3%, and this we are given by the Act, the 0.3%. That's where we get it from the Act. It tells us to use that. Then we will then multiply by our tax fraction. Yes, I am well aware that we've already excluded the input tax from the value of the vehicle, but they tell us that we need to use the tax fraction, and that is why we use the 15/115. Then again, because we are supplying both exempt supplies and taxable supplies, we will use the 60% and not the full 100%. 60%. And then we need to calculate this for every month. So when we do the calculation, remember that it's always per month. So now we need to multiply it by 2 months because it will be for December and for January. 2 months. Okay. Any questions with regards to the calculation? Everybody's happy? Yes, Mpho?
Can you touch on 3%? I see you times by 3% there.
It's not 3%, it's 0.3%, and that is from the Act. And that will be dependent on whether or not the taxpayer was able to claim the input tax when they purchased the vehicle. So if they were able to claim the input tax, then they would have been using 0.6%. In this instance, they were not able to claim the input tax, so they used the 0.3%. That is a figure that is given to you in the section. The 0.3%. Yes, no, maybe? Are you with me? Huh?
Yes, I'm sorted. Thank you.
You're sorted. Awesome. Okay, technology doesn't want to be my friend now. Yes, Winnie. And then Tandokazi. Winnie, you can go. Tandokazi, you can go.
I think it was a mistake on my side.
Okay, awesome. Winnie, I hope you are fine and you're not lost there where you are. But the value that we would have had would have been the 40 Rand. Okay. And that is our fringe benefit. Okay. Happiness. So those are all our transactions for the input tax, the output tax. Then we're going to have a total figure over there. Awesome. Let's go back to our transactions. Let's see what else is awaiting for us. So number 3, we've answered everything here. There's nothing else that's left. Then they tell us about the maintenance in note 4. Let's go and see what this maintenance is made up of. Maintenance of 16,416 Rand include paint brushes, and other hardware items purchased to effect repairs to various buildings. How would we treat this? Yes, Esther.
So we would multiply it by 15/115 and then by the 60% input tax.
Yes. That is correct. For some reason, my technology doesn't want to be my friend. Yeah, no, technology doesn't love me anymore. That would give us an amount. Maintenance cost. Yeah, there we go. Okay, that's an easy one, Mark. Let's go to the next transaction. Then they tell us we have insurance premiums And they tell us more details can be found in note 5. Note 5.
My hand has been up.
Oh, I cannot see it. Yes, go ahead.
Okay. Now, with regards to depreciation, was there no mark for saying that it is not a supply, and so there would be no VAT levied on it? There's a line item
Yes,
for depreciation.
yes, you are correct. You are correct. There would have not been any let's just put that down. Depreciation. Okay, not a supply. So there would be nothing there. Okay, that is correct. There would be a mark for saying that. So we see we almost lost out on the 1 mark. Thank you. Thank you for having the patience to keep up your hand. Now the other hand is gone. I can't see. Okay. Let's move on to the insurance premiums. They tell us that the insurance premiums of 15,048 Rand were incurred for insurance on the motor car, the truck, and various buildings. How would we then treat that? How would we treat the insurance premiums? Walk me through it, ladies and gentlemen.
Dineo, can I take it? I'm not sure.
Yes.
I think take the amount of the premium over. But you already wrote it. Is it you?
I didn't write anything.
Oh, okay. But I was going to say 15 over 115.
And then?
Yeah, I don't remember the amount.
And the 60%.
Yeah, and the 60%. Thank you.
Yes. Okay. So let's not forget the 60%. Because they told us it's for the various buildings that are owned, as well as for the vehicles or the truck. Okay. Then they tell us the next thing is interest incurred on the mortgage bonds, 85,500. How would we treat that?
Exempt.
Yes. Why?
It's a financial transaction.
Financial service.
Yes, the financial service. Bonds, and then we have this is exempt, supply, financial service. So it is, yeah, there we go. Then our next one, our next transaction, they tell us about, what do they tell us about? They tell us about office equipment rentals in note 6. Note 6, office equipment rentals of 5,244 were incurred for the 2-month period on the following asset: your fax machine, photocopy machine, and your coffee machine. How would you treat this transaction?
So the fax machine and the photocopying machine would be in a standard supply. The coffee machine is exempt or 0 rated, actually.
Why is it 0 rated?
Or is it exempt? It's exempt.
Why is it exempt?
Because it is like entertainment.
Okay, 50% correct. Tumelo wants to help you. I saw a hand.
Yeah, so because it's entertainment, input is denied. Input tax is denied.
100%. Because it's entertainment, your input tax is denied. It's not exempt, it's not 0 rated, it is denied. SARS says no, you cannot claim the input tax on this transaction, so we will not allow you to claim it. Rental on the fax machine, I'm not going to write that fancy word because I don't know how to say it. Photocopy machine, photocopy machine. Here we go. And then we have our rental of the fax machine is 2,736 multiplied by 15/115 multiplied by the 60%. And that will give us an amount of 214. Okay, then the rental of the photocopy machine, 1,482 multiplied by 15/115 multiplied by the 60%. That will give us an amount of 116. Then we said our coffee machine is entertainment. So it is denied. And then we said rental of the coffee machine. Okay. And that is 1, and that is 1, that is 1. Okay. So the 1 marks are accumulating. We will eventually get 100% correct. Then they tell us our employees' subsistence allowance is 2,000, or subsistence is the lines 741 Rand. How would we then treat that? Let's go see. They tell us that the subsistence is for tea and coffee provided to the employees. How would we treat this subsistence?
Will it not be the same as the coffee machine? Denied?
Yes, correct. 100% correct. So our subsistence. Subsistence. Okay. There we go. It is entertainment again, and it is denied, and that is for 1 mark. Then they tell us.
I've just got a question on that one, if I may.
Yes.
I've got a note here that says something about fringe benefits. If input tax was denied, there's something about 30%. So, or versus 60% if input tax is claimable. If it's not denied, it's like, well, I think it has to do with right. Oh, is this motor car? This is a motor car. Never mind.
Yeah, that's for your motor car. And it's not 30%, it's 0.3%.
0.3, sorry, 0.3.
And 0.6%. There's a very big difference.
Yeah, no, you got it. Thank you.
Yeah,
Okay. The motor car.
Awesome. Cool. Okay, cool. Okay, 100%. Then the fuel of 2,830 Rand was incurred. How would we treat the fuel?
Exempt supply. I'm joking. Zero rated.
I almost fell off my chair.
Zero rated supply. It's a zero rated supply.
Yes, it's a zero. So it is a zero rated supply. So there would be 0 Rand on there. It's not a dash, it's 0 Rand. Very big difference. Okay. Where we have our dashes, we are saying that there is no VAT implications, but in this instance, it's a zero rated supply, so it's a 0 Rand. Okay. Then they tell us something more. They tell us about VAT dates. Let's go to note number 8. It tells us there, VAT dates of 16,188 rands are made up of debts written off for commercial rental debtors of 9,804 Rand and for residential rental debtors of 6,384. How would we treat that? Excuse me.
I would say the residential portion is exempt and the commercial portion is 15/115.
Yes, that's correct. Esther, you can go ahead.
I would have said the same thing, but I would have said the 16,000 minus the 6,000 and then multiplied by 15/115.
Okay, awesome. Either way, it takes us to the same place. One is an Uber, the other one is a taxi. It's the same, 6SD. Times, but yeah, you're correct. 15 over 115. Here we don't need to multiply it by the 60% because just explain that this part is your exempt supplies. And yeah, so there would be no input tax on that one. So we don't need to multiply it by the 15% because they actually give you the amount that is relating to your exempt supply. So you don't need to apply the 60% in this instance. You can just use the figures that they actually gave to you. Okay. That would be 1,217. Okay. Okay, this would then earn you 2 points. Yeah, awesome. Then they tell us, almost there, don't give up, guys. We're almost there. Traveling expenses in note number 9 of 12,312. Here's the detail. It tells us that the travel expenses are made up of 2,508 Rand for hotel accommodation and meals incurred by an employee of Mini Rent Pty Limited during an out-of-town business trip to locate new property to let. Two overseas air tickets costing 9,804 Rand, purchased by Mini Rent Pty Limited. The overseas air tickets were given to an employee and his wife as part of the employee's salary package. Must be nice. So how do we treat these two? Okay. Okay, wait. I heard you saying fringe benefits. Which one is the fringe benefit?
The tickets, air ticket. The
Okay.
air tickets.
Okay. Okay. And then, okay, so how would you treat the air tickets?
Exempt supply.
Huh?
Zero rated.
Exempt
Okay,
supply.
thank you.
There's zero rated.
There's someone who keeps saying exempt supplies. After I said to you, if we're going from here to Malaysia, it's zero rated supplies. To Bali, I said Bali. You're hurting my heart. We're going to Bali, zero rated. If you're going to Thailand, zero rated. They will not be exempt supplies.
I've just got a question on travel. I think the gent who said exempt because of something about that transport by road or rail. What's that exempt? How does that exemption work?
Okay. If you are flying in a flying machine, zero rated. Ne? If you are on the road in a car, in a bus,
this is purple.
is someone who's speaking and we can hear you. I don't think you're engaging with us anymore. Okay.
If you're flying by a plane, zero supply.
Yes. If you're in an aeroplane in the sky, if you're going from here to Bali, from here to America, anywhere else but South Africa, you are going to have zero rated. But if it's local, standard rated. If you are in a bus, you are traveling from here to Durban, exempt supply. From here in your tax, exempt supply. And
So
if you have your...
The moment you enter airplane out of the country, zero rated.
Yes.
And then transport by road or rail locally. That's what if I took, I mean, just for argument's sake, what if I took a train from here to Zim? Just, I mean, I'm nitpicking. I'm nitpicking, but I'm just curious.
No, I'm going to let you answer yourself.
Yeah, it's
so
out of the country.
Okay, got it.
How would you then treat it?
No, got it. I just wanted to see if it's strictly because it's on the ground or on rail, or if it's because you're leaving the country. So it's export So going out, I get it. Okay, got it.
Yeah.
Thank you.
Awesome. All right. Okay. So let's go back to the lost transaction. As part of your salary package over there, your tickets, the person said there was a fringe benefit. I get it. I do. I understand what you're saying. Yeah, I get what you're saying, that it's a fringe benefit. In this instance, I don't know why there isn't a fringe benefit, but according to the solution, there's no fringe benefit. But there's a story there. I'm gonna go back and read some more and see why is it that in this instance there was no fringe benefit, and then I'll come back with an answer when we meet again. I can even include it as part of the memo when I send it through. But in this instance, there was no fringe benefit. We would treat this night.
Is it not a fringe benefit in relation to the salary? So like a salary fringe benefit. So would you not treat it the same way? Would you not treat it the same way we treated salaries and wages earlier?
As a salary, yeah, because it's not they're not carrying on an enterprise.
Yes.
Yeah, that makes sense. But then remember, still, when I get what's the word? When I get a fringe benefit, it's still part of my salary and wages. Hello?
Sorry, Jenny. Is it not a fringe benefit? Because if you were not employed there, you would not have got that free ticket.
Yes, yes, that's what I was. Yeah.
Yourself.
Yes, you're right. You're correct. Like I said, I'm not sure why in this instance they didn't include it as a fringe benefit. But I will go and read a little bit more because I have seen in another question where they had instances where they gave the employees amusement tickets and that was a fringe benefit and then that was a deemed supply. So I'm not sure why in this instance we didn't deem this as a deemed supply by the employer to the employee, because even a right of use of your motor vehicle of my employer is in relation to me working for the company. If I didn't work there, I wouldn't have gotten the fringe benefit. So because of my contract with my employer, I have that fringe benefit. But in this instance, they did not include it. So I'm not certain 100% why, but I'm going to go back and read some more and then I will give it to you in the solution. Okay.
Okay.
All right. Awesome. So let's just finish off the last two things on the question and the solution. So we said the flights. Yes, overseas. Yes, you can speak to me. I can multitask. I lie.
Isn't it because maybe it's because it's a business trip and he was also technically looking for opportunity that we wouldn't include it, but it would be a fringe benefit in his salary because obviously he's still performing work in a way.
Okay, thank you for that point. However, there is two transactions in this question, in this note. There is the first part, which is the traveling expenses for the hotel and meals, which happens to locate the thingy, the new properties. But the other one is not related to the business at all. That one is just, oh, you are our managing director. Here you go. You get 9,000 Rand worth of tickets and you and your wife can go overseas. It's not related. It's actually two separate transactions. Yeah.
Can I offer something here? I'm just reading my notes. I'm seeing something here about the fringe benefit must be taxable supply and the employer must pay VAT on it. So is it not because this one is zero rated? I don't know, linked to that maybe.
be. That's actually a good take. Yeah, that does make sense. I cannot confirm or deny, but that makes sense what you're saying. I'm gonna go back and read and then come back and confirm. Yeah, but that does make sense that if, because it's a zero rated supply, there wouldn't have been any VAT on it. Yeah, it makes sense. It does make sense, but I don't want to give you a half-hearted answer. I'd rather go confirm, then come back and give you something that's solid. Is that better? Isn't that better?
Yeah, 100%. Thank you. Thank you.
Okay, awesome. So the last one was the hotel accommodation. They didn't tell us whether it relates to specifically the commercial business or the commercial rental, or is it related to the exempt? So we assume that it applies to both. So we will then apportion it between the 60-40 rule that they gave us the apportionment story. Okay. Then let's see if this will be tax payable or refundable to mini rents. Oh, plus. Let me just say plus. So just looking at that, that is our answer. So this will be the amount, the VAT refundable to mini rents for that period. So they're going to get a very lovely refund, and this is all thanks to them purchasing the commercial property during this period. So then you get 1 mark for giving them the conclusion, giving them what they asked you for. Okay. So our time does not allow us to do the second question, but I will complete the second question and then I will put it in the second sheet of the spreadsheet so that you guys can go through it. And then when we come together again next week, same time, you guys can then ask me any questions from the solution and even the question. Please make the time to go through the work that we did today. Don't just study this, forget about it next week again. We are building on, and then when we are coming together in our last session, we're going to be doing an exam type question where we will cover everything that you would have covered throughout the year. So please do not forget the information. Keep it in your minds. Sleep, eat, drink, tax, so that at the end of it, we are all getting above 75%. Yep.